Joining us is Limlingan, Head of Sales at Regina Capital Development Corporation. It's good seeing you again, Luis. Welcome back to the program.
Hi, good morning, Kathy. Thanks for having me.
Okay, so how are the markets positioned for the Fed and the Bangko Sentral decisions over the next 48 hours?
So this is the last meeting both of the Federal Reserve and the BSP respectively, no? And I think the markets have been pricing in that for both meetings, there's going to be a 25 basis cut for both. So that would bring the Fed to three cuts actually for the year. While I think if I'm not mistaken, the BSP has already had 4 cuts this year. This would make it 5 to end the year. So that's what the markets have been pricing in.
Could it be 50? I mean, how are the interest rate differentials going to look like if that happens?
Well, again, right now the differential for both the BSP and the Fed is around 1%. But if you factor in inflation, it's a bit higher since we're already at 1.5% for November. So I think at least there's a bit of a margin of, there's a margin of safety in terms of the real interest rate differential. We've had our, on the good side, we've had our interest rates well below 2%, which is better than the range of the BSP had predicted earlier in the year of 2 to 4%. So that gives the central bank position to still cut rates moving into next year.
But we've had to monitor the peso and at the level at which it is hovering. At what exchange rate level do you think forex becomes a real constraint for the PSAI because of imported inflation, higher funding costs, or even debt concerns?
Well, again, the BSP I think is really monitoring this, no, and I think everyone's just looking at the psychological 60 mark, no. So I think that is when the BSP might become more defensive in terms of supporting the peso. Now, some are also hopeful that again it's a Christmas season, so you would be expecting that the OFWs will be sending their dollars and other foreign currency back into the Philippines so they can enjoy the holiday season. So hopefully this can actually stabilize the currency for both December, maybe even a spillover into January.
But that's not going to go into the equities market. I mean, what is your view on the single biggest driver for the risk-on stance that we could expect heading into the end of the year?
That's true. A lot of these funds from the OFWs aren't really going, they're going into household expenses. So you wouldn't expect them to be going into the equities market. But I think what we tell investors moving into 2026 is, one, try to make it very short term. That's the first thing we say. Probably at the side, not making it 12 months, but rather into 3 months. And by doing that, try to also look at the calendar of events that they're going to come out in terms of economic data, specifically with regards to both inflation and the central bank meetings. Second is to also look into what is the expectation of the market. So it's not necessarily that you are right or wrong when you see how both the inflation and the central banks are going to come out with their decision, but rather what is the market pricing in. So if it is within the market, you wouldn't expect that much movement. But whether it's below, well above or well below, then you would expect that it might see some price action movement skewed to that direction.
Oh.
And third, I think is if it's well below or above, will it change the assumptions of the market moving forward? And that is something that I think we tell clients to look at when the economic data usually comes out.
Well, what we're sure about is there's the underperformance of the PSEI. When you compare that with a regional market peers, to what would you attribute that specifically in terms of corruption issues and infrastructure-related scandals, as opposed to the global or the macro factors that other regional peers also face?
Well, again, we have to address the issue that I think it really is hurting sentiment at this point regarding the scandal. in terms of optics, it doesn't look well. I think it's really hard to put a number on it and how much it's going to influence selling. But again, it does influence the foreign funds, no, as to how they're going to position. Second, I think obviously even from the beginning of the year, right? I think the markets were heavily affected. I think when majority of the regional markets were pricing in what is going to be effect of the tariffs. And that's why I think everyone became very defensive, no? So again, it's not just what we're seeing on the local front, no? It's also what's happening regionally.
That's true.
Lastly, I think, yeah.
Yeah.
And then of course, lastly, I think everyone has been a bit worrisome about whether or not we're going to witness an AI bubble. We've also told investors, well, it is a concern, but let's also look into historical facts. No? I think so far we haven't seen any bubble that has been triggered by the loosening of the policy. It's usually these bubbles actually happen because of the tightening. No?
Let me pick up on the foreign fund flows, Luis. Very interestingly, and we have about a minute. What concrete developments or signals would investors need to see to convince foreign funds to come back in a big way?
I think the more obvious ones, if you're a foreign fund, is that again it's really hard to dedicate a lot of attention into smaller markets such as the Philippines. No? So I think one is when you see the credit rating agencies reaffirm their conviction on the stability of a certain country, then I think that's how they're going to actually start looking into it. Second would be really the performance of the market. Are the corporate earnings going to continue? Right now, for example, in the index, there have been 5 companies that have performed remarkably, double-digit return. No? So we'll see more of these moving forward. And I think third, again, it's the economic data. Will it continue to improve or at least stabilize? So that's what I think is going to help the investors slowly come back into the market next year if there's any possibility.
All right. Well, so many questions and answers, but we'll be monitoring. Thank you so much. Luis Limlingan of Regina Capital joining us there.